Hi, welcome again. I'm Dr. Femi Johnson, and today we're going to be talking about land banking versus buying a property, a home, or a house for investment. Now, what's land banking? For people that don't know, land banking means purchasing land and holding it, hoping that the property or the land price would increase over time, and then you can sell it at a profit. So technically, it's investing in land with a view to profiting from the sale of the land in future at some heavy profit. Now, with land banking, people typically buy areas where are not developed yet, so you can increase your margin on it, right? Typically, it doesn't mean if you buy where it's fully developed, like Ikoyi or Victoria Land, you still won't make money. But, when you go buy on the outskirts, sometimes where infrastructure hasn't even reached, right? Then you get very cheaply infrastructure, roads, drainages, lights, street lights, and all of that come to meet you there, and those tremendously increase the value of the land, right? So it's a thing. People actually do land banking and make a lot of money from it. A lot of money, right? However, if you're doing land banking, two things you need to worry about. First is, it's difficult to raise funding for land banking. People typically don't lend for you to just buy land and keep. Second is, with the climate we're in, right? People are sure you've all heard about Omoniles, haven't you? Omoniles are traditional families that own land. And we've heard of sharp practices, even from other people that are not Omoniles. People sell the same piece of land to 10 different people. And then you all end up in court. Who owns the property? They've sold to different people. And then when you come back, they say, oh, the representative that sold to you is not the real family representative. Well, the money is gone and all of that. So there are a lot of myriads of issues, even though it is very profitable. So if you want to do land banking, make sure you're buying from the right source. Sometimes buy from government, right? Government sells land at areas that hasn't been fully developed at very cheap prices as well. Now, take this vis-a-vis property, completed units that you're buying for investments. They also increase in value, oftentimes not as much as the bare land, but guess what? They come with very, very reduced risks. If you've bought a property that's been fully built already, one, you can earn on it by putting a tenant in it. So you're earning rent while you're paying for the property. Second is you can get a bank loan to buy that property, meaning that you don't have to wait until you've saved up the money, but someone can give you a loan to buy that property, right? And the property, of course, becomes the collateral or security for the loan. So you don't have to go and look for collateral elsewhere. So that helps, right? However, oftentimes the returns on the property is not as much as the returns on the land, especially if you are buying what they call virgin land on the outskirts that is not yet developed with infrastructure and all of that. It may take you longer for you to be able to realize a gain on it, but when you do, it actually gives you far more profit than if you did a property. So again, which of it is better? I guess it is where you are on your investment ladder. One is riskier or has more risk. The other one has low risk and less entry barrier because someone can actually lend to you to buy. The other one can also get you revenue immediately by you putting a tenant in it. With the land, for example, sometimes you might get someone to rent it as a parking spot or as a container yard or something, but that's very few and far between, especially if you're buying on the outskirts where you don't even have infrastructure there yet. People won't be there to rent from you, right? So again, it depends on you. The more risk you take, the more reward you get. Most people play it safe and just buy the property. But the people that have deeper pockets, they go for the land. They can afford to wait long, 10 years, sometimes 20 years before they sell, and they can afford to then pay all they need to ensure that the land is secure and they don't have to worry about it. So again, in a nutshell, land banking versus property for investment, they both have their pros and cons. It depends on where you are on your property and investment journey. Thank you very much for being here. Thank you for your time. Thank you for listening to me, and I'll see you around next time.